Do you want to maximize your success with NCUA? Join Mark Treichel as he shares with you the insider's view on passing your exam with flying colors. The With Flying Colors podcast is sponsored by Credit Union Exam Solutions by Mark Treichel. If you would like to work directly with the Credit Union Exam Solutions team and receive support to optimize your results with NCUA so you save time and money, visit us at marktreichel.com to find out more.
Hey everyone, this is Mark Treichel with another episode of With Flying Colors. I hope your summer is going well. It's finally cooled off a little bit across the country, and that's a good thing. This is going to be a catch-up call, if you will. I'm going to update you on some things coming down the road, and I'm also going to talk about, just listen to Callahan's quarterly, whatever they call it, Callahan's quarterly state of the industry, and I had a couple takeaways from that data. That's always an interesting thing to take a look at from a first blush of what's going on quarterly in credit unions. All right, so what's coming up with Flying Colors? Later this month, I have an episode coming out on field memberships and new charters, and my guest on that will be Keith Stone of the Finest Federal Credit Union, and also an organizer and CEO of the New Jersey PBA Federal Credit Union. I'll be joined on that with Rick Mumm, a former colleague of mine at NCUA, who also does consulting on field membership and also assists me with my clients. But anyway, that's coming up. We'll talk about the new charter process and how they were able to achieve the fastest new charter being approved in what we believe is the history of NCUA, at least going back to when they gave them out a dime a dozen back in the 60s. So in the last 40 years, let's say, the quickest. But that's coming up at the end of August. Then in September, I have an episode on called something like You're a Code 3, Now What? Followed by another episode called You're a Code 4, Now What? We're seeing more Code 4s, by the way. I'm very curious to see what the next quarterly round of data will show. I believe it'll show Code 3s are up, and for the first time, perhaps a material increase in Code 4 assets. We also have an episode coming up with the concept of NCUA is asking to meet with the credit union's board without staff present. Yes, indeed, that's happening far more frequently than I can ever recall at my times during NCUA, and I'll be discussing that. Those three podcasts I just mentioned, I'll be joined by members of my team, Steve Farr and Todd Miller, and you can expect to hear those episodes in September on Mondays. Other than Labor Day, I'll probably put that one out on a Tuesday. But so that's coming down the pike. I'm going to be on a webinar coming up with the Trade Association, and I'm going to be a guest on a couple other podcasts. And when that happens, I will alert you here and, of course, on LinkedIn and perhaps on email if you subscribe to my email list. If you don't, I suggest that you ask that you get added by going to my website, marktreichel.com, or reaching out to me on LinkedIn. It's hard to believe that with all the years in place now of doing the podcast, this is the third calendar year. So by the end of the year, we'll have completed 3 years. We have 192 episodes live with Flying Colors. And some of you are aware I have a related podcast called Credit Union Regulatory Exams, where it's an audiobook style podcast. It's AI driven in that it'll be, for example, NCUA's priority letter. The AI part of it is it's an AI voice that I've coined Samantha Shares, as in a hat tip to the shares of credit unions. And 99% of the time, you can't really even tell that she's AI. Occasionally you can. And I'm sure if you do listen, you'll pick that up. But if you like audiobooks and you want to study some of the NCUA, FDIC, OCC, other guidance out there, that's a good way to do it, whether you like to do it when you're working out, walking, or what have you. So if you haven't checked that out, I encourage you to check that out. But 46 episodes of that. So what's 46, 192, 238 episodes combined of the two shows so far. And moving forward, we will, if you subscribe, you likely know that the With Flying Colors comes out on Monday. FYI, Credit Union Regulatory Exam podcast typically comes out on Tuesday. And with the volume of podcasts that we have done now, there are several that are structured in a way that it's what I would call an evergreen topic. Evergreen meaning it always has relevance. Moving forward, starting in September, actually this week, this past Monday, we issued an evergreen topic on 10 reasons why NCUA should not regulate, 10 reasons why NCUA should not regulate succession planning. And we're going to have coming in September, without calling it a Throwback Thursday, on Thursdays, we will be issuing our evergreen podcasts, topics. Some of them will be on fair lending. Some of them will be on commercial lending. But there's quite a big arsenal of those that we've built up over these 3 years. And we will have one of those coming out more often than not every Thursday morning. So you'll have With Flying Colors on Monday. You'll have the Credit Union Regulatory Guidance podcast on Tuesday, followed by With Flying Colors again on Thursday. And again, those will be the evergreen topics on Thursday. All right. So I listened to Callahan's talking about the data for this most recent quarter, and I'm going to flip to that real quick here. The numbers are generally, I would say the numbers that they reported for the industry are better in the second quarter. Some things that caught my ear were that profitability was marginally better. Charge-offs were flat. Net interest margin had improved a little bit. I'm curious about this. They indicated that more credit unions are hedging. I would say historically, not enough credit unions have taken advantage of that, maybe because rates have gone up so much. It's been an aha moment for the industry. But this was ALM First that was doing this portion of their discussion, and they indicated they have a lot more credit unions pursuing that product. I think that's a fabulous thing. And as a reminder, if you want to be in hedging, it's easier to do it when you're a code 1 or a code 2 than if you're not a code 1 or a code 2, because then you need to get NCUA's approval. And by then it can be painstakingly long to get that approval. You're better off again doing it if you're a code 1 or code 2. That would be my thought on that. Down to about 4,600 credit unions, total assets of $2.3 trillion. Interestingly, they showed and mentioned that loan growth had slowed to less than 4% over the last 12 months, and that had been over 12% the last 12 months. So from June of 24 to June of 23, compared to June of 23 to June of 22. All right. And the other takeaway was that share growth had improved. The previous 12 months, the share growth was 1.2%. Over the last 12-month period, it was 2.7%. They're also very cautious to differentiate between the mean and the median. Of course, the mean is the average. The median is the middlemost number. So if you're looking at 4,600 credit unions, the median would be 2,301. And the interesting part on that, and probably the biggest takeaway from this, was that while share growth on the average was 2.7%, the median, so the middlemost credit union, shrunk 1.22%. And the middlemost credit union, they said the asset size of that was 59 million. By the way, the average credit union in assets is 500 million. Again, they mentioned that 25% of the assets of the industry were in credit unions over 10 billion, and that's only 21 credit unions. So that's where the mean and the median can play havoc with these numbers. But the big takeaway for me was that the median credit union, meaning half of credit unions, had at least a decline in shares of 1.22%. And of course, one thing that gets lost in having growth at 2.7% as the mean, if you're not growing as much as you're paying your members. So let's say, and I don't have this number here in front of me, they didn't mention what the cost of funds was or the cost of shares, but let's say the industry grew at 2.7% over the last year. The cost of funds was 2.6%. That means share basically grew 10 basis points. If the cost of funds was 3.5%, that means you actually shrunk dollar for dollar, because you're basically not even retaining the dividends you're paying to your members. That's something I'm going to dig into. I haven't had the time to go look at the numbers and see what the actual share cost was. They didn't have it on one of their slides, but it's something I'm going to take a look at. Certificate growth is at 31%. Unrealized losses have come down from in the industry in totality from a $41 billion unrealized loss to $30 billion. So what's that? A decrease of 25%, with rates likely, according to all the soothsayers, rates being down here shortly. That number should continue to get better. Another takeaway was borrowings had decreased year over year from 6% to 5.3%, and cash reserves were being built up to about 8.2%. They talked about real estate loans only being down slightly. Consumer loans were down 15%. Credit card loans were up 7%. HELOCs were up 20%, and commercial loans were up 10%. A lot of discussion about most of these numbers look potentially alarming. However, when you compare to pre-pandemic, they're really not that bad. But the proof will be in the pudding to see what happens. Do we have a soft landing? Do we have a hard landing? Where does the election take us? Et cetera, et cetera. I'm looking forward to see what happens in Code 3s and Code 4. As I mentioned, we've got podcasts coming out on the ramifications of those slipping to a 3, slipping to a 4. Lastly, Callahan mentioned that charge-offs are down and delinquency is up. So that's a quick summary of kind of what's coming forward here from me, from this podcast, from my other podcast. Looking forward to getting some feedback on those other podcasts we've got already lined up. I think they're pretty exciting, and I have some other oars in the water of some things I'll be adding to the podcast coming here in the fourth quarter and perhaps in 2025. All right, that's it. That's a wrap. As always, I really appreciate you listening. If you enjoy it, if you could alert your friends and peers, that would be great. And or if you could rate us on iTunes, Apple Podcasts, 5 stars, hopefully. If you have the opportunity to do that, would help me out. I'd appreciate it. And that's it. That's Mark Treichel. Appreciate you listening. Signing off with flying colors.
Thank you for joining us on this episode of With Flying Colors. Subscribe on your favorite podcast app to hear future episodes where subject matter experts of all varieties will provide tips on how to achieve success with NCUA. If you would like to learn more about how we assist credit unions, check out our services at marktreichel.com.